Most traders spend their time trying to predict where the market is going. I don't. My strategy isn't based on guessing. It's built around understanding how institutions move price. I follow a simple process: higher time frame bias, liquidity, sweep, displacement, retracement, execution. When those pieces align, I trade. If they don't, I stay out. Everything starts with the bigger picture. I begin on the 4-hour and 1-hour charts. I'm identifying market structure, overall trend, previous day high, previous day low, and major liquidity zones. I'm not deciding where I want price to go. I'm waiting for the market to reveal where institutions are targeting liquidity. That bias is the foundation. Next, I mark the most important liquidity levels: previous day high, previous day low, Asian session high and low, London session high and low. These aren't random lines. They're areas where traders place stop losses. Institutions target these to fill large orders. Knowing where liquidity sits helps me anticipate where the real move is likely to begin. Patience is everything. I wait for price to sweep above a high or below a low. That sweep tells me liquidity has been collected. But here's the mistake: they enter immediately. I don't. A sweep is information, not an entry. Now I wait for confirmation. Displacement is the most important part. After the sweep, I want to see an aggressive move away. Large candles, strong momentum, conviction. That tells me big players have stepped in. No displacement, no trade. It's that simple. I never chase price. After displacement, I wait. I let price retrace into the fair value gap, or the order block created by that move. The market comes back to my area. I don't run after it. Patience gives me better entries, smaller risk, and higher probability trades. Inside my entry zone, I still need confirmation. That could be a strong rejection, a decisive candle close, volume exhaustion, or a shift in market structure. Everything must happen at the right location, because the location creates the edge, not the candle. Risk management keeps me in the game. My stop loss goes beyond the invalidation point. My target is the next major liquidity level. I trail my stop to protect profits. The goal isn't to win every trade. It's to protect capital while letting winners work. Sometimes the best trade is no trade. If there's no sweep, no displacement, messy action. A late entry, emotional decision making, or I'm chasing candles. I stay flat. Missing one opportunity costs nothing. Forcing a bad trade can cost everything. Here's the complete process. Start with higher time frame bias. Mark liquidity. Wait for the sweep. Confirm displacement. Wait for the retracement. Enter from a fair value gap or order block. Manage risk. Target the next liquidity level. No guessing, no chasing, just structure, liquidity, displacement, and discipline.